Hey, everybody, this is James Pelton here with an AMA for you today. I hope you're having a good Saturday so far. We are going to be talking about deHedge. deHedge. We'll have to ask Anthony how exactly. I've just read it, so I'm not totally sure how you pronounce it, but we'll talk about that. What I need from you, if you're in the audience, please hit the like button. Again, very, very helpful to the YouTube algorithm. Then I always like to have kind of a comment question of the day just to get comments kind of going as we start here. So let's do, what's your favorite travel location? Okay, I was just telling you, I've been in this last week. I was in London, Dubai, Abu Dhabi, going to South Africa next week. So all over. Where's your favorite place that you've been? Let me know in the comments below. And then as always, if you have questions as we're going, things you want clarification on, please ask. I found you guys are much better at asking questions than I am. So feel free to bring up your questions and we'll get to those. So Anthony, welcome to the channel. Thanks for joining us here this morning. Can you start by giving us a quick introduction of yourself before we dive into deHedge?
Yeah, I'm Anthony, CEO of deHedge. Thanks very much for having us. I myself have been in the crypto space, first invested around 2014, really dived in deep mid 2015 maybe, and then been part-time trading and investing heavily since around 2018 and full-time trader for the last 2 years.
Okay, very good. Awesome. Love it. So now talking about, so it's deHedge, not deHedge,
It's
deHedge. Okay.
deep.
Okay, good. Good to clear that up. Can you kind of give us an elevator pitch? Again, assuming some people in the audience have probably never heard of it. This is their first experience. Can you kind of tell us what elevator pitch of what deHedge is trying to do and kind of the vision of what you're building?
Yeah, so myself and the team, we got together 2021, right in the midst of all the rebase models, everything unrealistic, 1% a day. Everybody's losing money unless you got in day one or day two, very, very early. So we got together and we wanted to bring something to the space that isn't just realistic, but it's competitive, especially with real world terms. So your bank may offer you 0.8% APR. If you have a large ISA in the UK, you may get up to 2.5% if you're lucky. So we thought, right, what can we do to use our skill set, our expertise, to bring something to the space, offer people a decent enough return so that they are happy, and not only that, how can we grow that APR? So what we decided was, as I said, I'm a full-time trader for the last 2 years, investor. We thought it would be good to lay a foundational set of investments that are premium investments, very much like validators, miners, things that are usually out of your normal investors' scope of being able to invest in. So they provide the stable, realistic return that our treasury needs. We've set 15% as our initial return rate. That's what we've found that we can make through the market dropping and in the bear market. So that's the bare minimum that we can return. That will also encompass our treasury making money. Our treasury will then grow, and alongside the treasury growing, we will increase the APR. So it may start at 15%, but going into the bull market, if we had the backing to provide 150% APR, then we would provide that return. As long as we have the backing for it, everything comes back to the investors. The team does not make any money. We haven't taken any money yet. We don't want to take any money until investors have their return. We won't make money until they make money.
Okay, very good. So just to make sure I understand completely, I'm always told say back what you understand to make sure it's correct. So it's talking about 15% per year. You're taking the funds and putting them into kind of safer plays like validator nodes, and maybe we'll get into the specifics of which ones you're getting into. And then the plan is, as you make over 15%, you're going to be taking that into a treasury to put more into some of those safer things. So the goal is to eventually get that 15% up And do you kind of have like a goal of where you'd like that to cap at, or is it just kind of, we'll see in 10
so
years, who knows?
the only thing we've set is the 15% baseline. We know we can provide that through the worst possible market, so that's what we set as a base. The cap for the max, we don't want one. There's no need for a max. If we can't provide the max, then we won't give the max. If we can keep up in it and up in it and up in it, and we can keep the treasuries portion of the profits compounding, and we keep growing that back in, then we'll keep increasing the APR. Again, 15% is the base rate. If it comes to that, our focus and our projections are saying, "Ooh, the market's looking bad. We need to pull back." Then we'll make the community well aware of that. Make investors well aware of that. There'll be a big enough time period for us to be able to say, "Look, we're going to have to pull back from 50%. If we've hit 50%, we are going to have to come back down," and we'll make people well aware of that. But as a max cap, definitely not. We don't need to put a max cap. If we go into the bull run and Bitcoin was to go and hit 500k and our treasury was worth 150 million, and we can give 1,000% that year, then we'll give 1,000% that year. As I said, everything comes back to the investors. So
Okay. So can you do you want to talk about how often do you think you'll be revisiting that APY or APR? Is it going to just kind of be as the markets dictate and you'll keep people up to date in Discord, or is there going to be a set once a month we're going to relook at that, or how are you planning to do that?
yeah, so we're constantly monitoring everything daily. The markets change daily. It takes one small little bit of news for, as you know, Bitcoin to go up 15%, 20%. It would only take a small little bit of news from a government to say they were going to support Bitcoin, and you'd see Bitcoin at 35k pretty much overnight. It's rapid. So yeah, we wouldn't hold back. If we think we can up the APR, then we would release an article on when that would happen. We would obviously want the market to stay in a certain uptrend, or the protocol to perform a certain way for a certain amount of time before we increase that APR. And that would be well outlined, and we would make everyone well aware of that.
Okay. Nope. That makes a lot of sense. We have some questions from the audience. So as we're going, I kind of just want to bring those up as they come in. But what coin are they paying in? What currency do they intake? So what do people need to send in, and what are people going to be paid out in?
Yeah, so right now we're doing just stables. So when we go live for the main launch, we will be cross-chain. You'll be able to use a stable of any kind, whether it be BUSD, USDT, USDC. You'll be able to stake your stables, and you'll be paid back out in stables. There is scope to use governance coin in the future, but whilst the market is so volatile, we wouldn't want to risk the protocol being damaged with price volatility, and also the returns to investors. We wouldn't want to risk, let's say Bitcoin goes back to 30, you invest so much Bitcoin, and then all of a sudden the market tanks, Bitcoin goes down by half. We haven't had a chance to actually swap that Bitcoin to stables, so all of a sudden the value is halved, and everyone's lost out. So stables definitely for now and the foreseeable future. But once the market stabilizes and we see that there's a possibility of change into governance coins, then we will add later.
Okay. And Quarter Mile says, I'll send UST. So I don't, that's probably off the table. No UST, I'm guessing.
Yeah, we won't be accepting UST.
Yeah. No UST. Can you kind of talk about, so when you talk about, 15 to 20% APY or, APR in DeFi or in crypto, some people just turn off their brains. They're like, that's too low. It's not worth the risk. Do you want to talk a little bit about some of the safety features that you have? Because people feel like in DeFi, there's just inherent risk of, rug pulls, contract problems. There's just so many things that can go wrong. Do you want to talk about why people would, the safety would be worth the 15 to 20%?
Yeah, so everything from being fully doxed, audited. We even have an insurance pool that investors can utilize if they want. Um, every single security measure that we've thought we need and we think investors need, we have tried to put in place. Um, through the Discord, if somebody, a member of the community, come up and say, we think you should add this, it will bring safety, then we look to implement it. Um, as you say, it's not the easiest thing in the world to get interest when you're returning a 15% APR, but I think it's needed in the space. We're all here for the same reason, and that's decentralized finance. We all want decentralized finance to be adopted. With the 1% a day and people losing money all the time, that's not going to happen. I mean, if I go and speak to 9 out of 10 of my real life friends, I mention crypto, instantly they say that's a scam or that's a pyramid scheme. Um, that needs to change. The whole sentiment around DeFi needs to change. And that'll only change when people are being realistic. Yes, you can still search for your meme coins and you can still search for your 1000Xs in 3 months or your Pepes or whatever that is. But for the mass adoption of the real world of normies, if you want to call them normies, there needs to be realistic and stable environments for them to make the transition.
Okay. And we have a lot of people in the audience. They heard the word insurance and that kind of perked up. That's something unique. We haven't seen that in. Can you just explain how that works, how people partake in that?
Yeah, so the insurance is we provide an allocation to an insurance pool that will constantly be topped up from the actual protocol profits. Everyone else will be paid out first. A percentage of the protocol profits and team profits will go to the insurance pool to keep filling. So it'll start off with a low backing, obviously. But as we grow and as it keeps being topped up, it will in time become one-to-one. So then anyone who wants to utilize that feature can go to Secured Haven's DApp and they will be able to opt into insurance. It's something very small, like 0.1% a day. And yeah, you have the option for up to 100% of your investment to be backed.
Okay, very cool. I like that because again, I think in something with the returns a little bit lower, the safety of the funds is going to be, this is why it's valuable. You can go get, higher APR somewhere else, but your funds are not as safe.
Yeah.
So this would be like safe, a safer place. We won't call it safe, but we'll call it a safer place than elsewhere. See a few audience questions here. How big is the team? Any contingency plans? Quarter Mile is always suspecting that something's going to happen to you or that somebody on the team. I don't think he's going to cause it or anything like that. But what are contingency plans and what's the size of the team?
Yeah, it's fine. We've only got a small team. We have our CTO, our main dev. We have our COO, who's a real life business owner, multiple businesses. He handles all the admin side of things, anything that needs to be done in the real world side of things with documents, paperwork, etc. We have our CPO, who is a product owner of a major L1 chain. Can't name the name because we're on a different chain, but yeah, he's got his side of things, and then myself. Every one of us know exactly what each other are doing. We all have access to what we need. If my dev was to say go missing and we couldn't find him, then it would be very easy for me to employ someone else, give someone access to what he's been working on, and we've got the whole outline of what needs to be done. So yeah, not what one of us could die, and as sad as we'd be, we could still carry on. It's
okay. Well, yeah. Let's hope it doesn't come to that. But yes, that's good to know. Adam says, how often are payouts? So yeah, how's the payout structure going to kind of work?
Yeah, so first of all, we have the pre-sale NFTs, which is a collection of 1,000. Each holder makes up the DAO, and they have other utilities. So like bonus from protocol profits quarterly. They have real world utility, access to luxury resorts, etc. So they'll have quarterly payouts. Our bonds, our main protocol, they'll have rewards paid monthly. 100% of the returns can be compounded, but only 50% of the returns can be claimed. This is because we wanted to drive utility for the secondary market and have an added bonus for anyone that invests in them bonds. Let's say you lock up for 12 months, 6 months later, you say, oh, I really need money. You then have 50% of your returns built in that bond plus your initial investment. So you could very easily go to the secondary market and sell for your initial investment back, and you have no issues. Yes. So that is the structure that we'll be sticking to for the bonds.
Okay. Nope. That makes a lot of sense. And Sean says, JP Hedge Fund NFT. Yeah, potentially. I've been doing all sorts of my own NFT. So maybe there's some collab. We've been talking off air a little bit about further ways to collab. So we'll have to just keep working something out. Because I've been obsessed with projects like this where it's like, hey, let's go for lower returns, but not lose all our money. Because so many people, you can't make progress towards your financial goals when you make a big return and then lose it all, and then make a big return. You just make no progress.
100%. And it's all about the wider space. As I touched upon just now, I think for the whole space, as in DeFi, to actually succeed and get mass adoption, it will happen, no doubt. But for it to happen quicker, there needs to be a network of individuals and protocols that act as a safe haven. So it could be 10 protocols, it could be 100. If people know, right, that's the safe area, I can go there. James Pelton's there, deHedge is there, your Bonks is there. We know we can go there. We know we can put our money. Yes, we might only be getting 15% APR, 20%, 30%, but I know I'm not going to lose my money. It's there and I'm safe. That in itself will start to draw more people in and start giving the exposure to the rest of the world without them thinking scam, pyramid scheme, or it just needs to happen.
Yep. And more people are moving to this type of project as they get scammed elsewhere. It's just, the 2% a day didn't work out again. And so then they're looking for safer places. It's not quite as exciting. We don't get on. It's not like we made, $10,000 every day like you do some of the degen projects. But again, it's wiser. It's more long-term oriented, and it will actually get you progress towards your financial goals. Whereas the degen plays just don't. They don't do it. They don't make it happen.
Yeah, 100%. I'm a big believer, and I'm a personal 5-year plan type person. So I'll set myself 3, 6, 12-month goals, but they all go towards my 5-year plan. And when you're getting 15, let's say 15% APR, if you need to make double your money, triple your money, which is great, within 4 or 5 years, 15% will do that for you. People focus on the 15% as the now and that number, but they don't realize when you keep building that 15%, that it becomes a much, much bigger number. And when you look and think long term, it starts to make sense.
Yep, absolutely. I kind of tell people sometimes too, if you really want to do the degen plays, put a little bit in, get it out as quick as you can, and put it into safer things. And so then you're kind of, you're using your degen stuff to kind of feed into safer things. That's a way to still, keep your degen spirit alive and well. But just those degen plays are not going to be, in 10 years, you're not going to be a billionaire through 2% a day. Like that's just not going to happen.
No, you're not going to have Lambos in your driveway.
Yep. It's not how it works. Let's see. Every vlog. Welcome. Good to see you, brother. He says, how are you doing, James? I'm doing well. Thank you for asking. One question. Will they let us know where they are investing our money? I mean, how much transparency do we get? So yeah, how transparent are you with, we have this exact amount and this exact amount and that? How much transparency do investors get?
Yeah. So we have a Notion document that has everything. everything we do, we don't move 1 cent without it being public knowledge. As soon as a transaction happens from the Treasury, it's noted in the Notion document with transaction IDs, and it's public. Every single thing is public.
Okay. We got Scott. Welcome, Scott. He says he's not live streaming from his car or talking about AI or the metaverse. I don't even know how to handle this. So yeah, we're happy to have some good projects on the channel. Yeah, AI, metaverse, that's all been a big thing right now.
Huge.
But he says on a more serious note, what are the greatest risks that they have identified for their project?
Yeah, so obviously everything in DeFi does come with risks, even validators, miners, etc., etc. We're always going to keep adding to our foundational investments, like validators, miners, real estate, and even them as safety nets, if you want to call it that. As we compound the treasury, once Bitcoin's back up at 60K, if we buy an ETH validator, say for 150,000, and then the market tanks, and then that ETH validator is say worth around what it is now, 50,000. Of course, the returns we're making on what we've invested, they are lower. But that's why we've focused on setting our foundational investments so early. And it's with our pre-sale funds. The team have not taken any money from the pre-sale funds. They've all gone towards the foundational investments. So it's allowed us to grow the back-end so early at the bottom of the market. So we have no liabilities now, up to around $2 million invested in bonds. So we only have assets, there's zero liabilities. The biggest risks we take are a small portion of our allocated funds, around 5%, will go to the likes of trading bots, manual trading, and then other DeFi projects that we source, whether it be our partners or whether it's somebody from the community comes and says, look, I think you should take a look at this. They've performed well for the last 6 months. We will go, we'll vet them. We'll test things with our own money first. We won't test things with protocol funds. And then, yes, we will invest into other DeFi projects. So they're the highest risk for our allocated funds. But again, that's why we're setting our foundational investments so that any higher risk allocations are mitigated with what's already been set.
Okay. Yep. Nope. That makes sense. And when I tell people too, there's always just the unknown risks. Like again, FTX going under. It's like,
Yeah.
okay, nobody expected that. And it's just the nature of finances. This happened. Banks have been going under recently, which is a risk to your traditional finances. So just never consider anything safe. But there are safer options. And so you're always balancing, hey, what's the reward I'm getting with the risk that I'm putting into it? And
Bits about you. I mean, one of the biggest losses for investors over the last 12 to 18 months is bridge hacks. And that's why we've focused on getting cross-chain, because we wanted to take that part of what the investor and the user has to do to be able to access what we're doing. There's so many user errors that it's just one little thing, and so easy to lose money. You've got to keep your wits about you, and you double check, triple check, and yeah, just make sure you're on the right path.
Okay, very good. Let's see. Scott says, I didn't quite understand clearly what you're going to be investing in. Can you quickly give some examples?
Yeah, so Ethereum validators, AVAX validators, miners, real estate, gold, you name it, and we've got contacts to make it happen. As I said, our foundational investments are set with stable yet premium investments. And then we will be placing a smaller allocation to other DeFi projects, partner projects that have been vetted, that are doing, like, say, Cadena hashing, They're one of Cadena's biggest mining facilities. We're invested in them. The Alchemists, they deal with gold and gold mines. So that kind of thing.
Okay, very, very good. Yep, no, I think that answers. And then just wanted to clarify too, Scott says, so you're not guaranteeing 15%. So is that a guarantee of 15% or is that the goal or what is that 15% number exactly?
So as everyone knows, with the wording of things, we are not guaranteeing anything. That's not to say that we will ever lower 15%, because we will not lower 15%, but we can't guarantee it, if that answers your question.
Yes. Nope. And that's it'd be concerning if you did. I would be, ooh, that's kind of a red flag right there. Let's see. Robster says, are they investing in existing ETFs then or creating their own portfolio? You're kind of creating your own portfolio and they're not securities.
No.
It's going to be all DeFi type stuff. So it's not, you're not going into the stock market or buying into the S&P 500. It's going to be similar to the things that I bring onto the channel. So you mentioned even, some of the minor projects that we've been talked about, the alchemists. So it's going to be those. So no securities involved here. So if you're SEC, if you're watching, you can just turn this off. There's no reason for you to be here. No securities involved at all. So, okay, can you tell us then, to the moment of truth, tell us about how to get into this? What is, it looks like it's pre-sale right now. Can you tell us about the NFT, what people need to do to get involved, when it's going to launch, all those nice details?
Yeah, so the pre-sale NFT, which is live now, we've just moved into phase 2. That is accessible on our D app. It's on the red light chain to utilize the gasless benefits. If nobody knows about red light chain, it's completely gasless. There's no fees whatsoever. It's great tech. It's absolutely amazing tech. So everything that you would need to know about that is in our Discord. If you need to know any information, etc., there's always somebody free. You just go onto our D app, you add the red light chain, and you just click mint, and it's as easy as that. For the bond phase, when we go live June 30th, you will be able to access our D app then from any EVM chain. So then you would be able to mint your bond with whatever size investment that you would like, in what stable you choose.
Okay, so for this pre-sale, it's going to be USDT-R on the red light chain. And so you'll need to bridge that over. And you're saying that those details will all be in Discord. It's not very difficult. If you've ever bridged before, it's pretty much the same process. You just take some USDT on any other chain, and then you can bridge it over to the red light chain. And then it's $550 for this NFT. And you're saying after pre-sale, is it still going to be NFTs, or is it switching to more of a put in however you want model, or how's that going to work?
The pre-sale NFTs will be available until the 1,000 mint out. As I mentioned earlier, they make up the DAO, and whether it takes 2 years or 3 years for them to completely mint out, they'll be available the whole time. The DApp for the bond phase will be a separate DApp, and a DApp all of its own.
Okay, very good. And Robster had a good question. He says, is the initial investment locked completely, or is it accessible again? We kind of talked a little bit about that earlier, but do you want to answer that here?
Yeah, so for the pre-sale NFTs, that is a locked value. You do get a return with bonus from protocol profits quarterly, and they are tradable on the secondary market. As I mentioned, there's other utilities that come with them, like boosting the main protocol profits, so boosting the bond APR. The bonds, you can pay a small fee of 5% to get your initial out early, or you can sell again on the secondary market.
Okay, very good. And Adam wants to know, what's the advantage to getting in pre-sale? Because there is, there's a bit more risk getting in pre-sale. It's not established. It hasn't been going for months. So what's the advantage to pre-sale?
So with the pre-sale, these NFTs will be rentable. You also have the chance to access luxury resorts that are, I don't know if you've heard of ATCC, but they are developing luxury resorts across the world. One of our investments is investing in their mother company. So we have an owned share of them resorts that will be accessible to all NFT holders. As I mentioned, you'll be able to rent these NFTs out to larger investors that are investing in bonds for the boostability, and then also the DAO as well.
Okay. All right. Very good. And then we had a few people that have had bad experiences with red light. Do you want to just talk about if people are concerned about red light? I know they've had their own problems with their nodes and things
Yeah.
like that. Do you just want to touch on that at all?
Yeah. So I'm there. I've been invested. I know exactly what you were all on about. Um, I'm quite close with the team. I know what's going on. I know how hard they're working behind the scenes. It may not seem like it, and a lot of people may not believe it, but they are working very hard to get things rectified, get people paid back, and fix whatever mistakes have been made in the past. From a tech point of view, red light chain is unmatchable from any other chain. I can guarantee you that. Um, we have never had a problem with minting. It is super, super fast, zero gas whatsoever. Of course, people are going to be skeptical because of what's happened in the past. And if you have any issues, feel free to talk to me about it. As I said, we are going to be cross-chain for main protocol. So it's only really the pre-sale you would have to come to red light. I would advise people go to red light chain because the gasless benefits, especially going into the bull run where volume is going to pick up through the market, gas is going to get expensive. I mean, Polygon is cheap, yet going into the bull run when volume picks up, you're going to start paying money for gas to mint NFTs, etc.
Yeah.
Red light will always be gasless. The benefit you make from there, if you're worried, then you can always. So our NFTs, our pre-sale NFTs, are also going to be cross-chain when we go live. There'll be a wrap-in function, and you can send it to another chain. If you have any worries, then you can mint on red light chain, wrap it, and send it, and get off-chain. There's options for you if you don't want to leave things on red light. But from my personal view and things I see, I don't think people are going to be worried for too much longer.
Yeah, and I will say too, when you're looking at kind of lower, 15 to 20% a year, you hate to spend, if you're on Ethereum, spend $50, a 10% fee on your gas fees, because that's going to be, 8 months worth of your profits.
Yeah.
So I mean, it does make, that gasless does make it a lot. It helps you return quite a bit. Not as important if you're making 50% a day, then yeah, it doesn't matter what you're paying in gas, but when you're looking at safer, lower returns, then you want to see low gas. That's
100%. And as I touched upon, Polygon's very cheap. But into the bull market, and once that whole market volume picks up, you'll start seeing Polygon's gas prices start to rise, very much like AVAX did with Krabada.
yeah.
It went from being dirt cheap to unmanageable. I was in node projects, red light node district. I was in there, and I didn't want to claim my rewards because Krabada was pushing the gas so high, it was just taking all the value. So yeah, it's surprising how quick that gas can creep up and start to ruin your day.
Yep. Absolutely. Next question. If no secondary market buyers exist, will the bank buy them back or deHedge?
Yeah, so that's going to be one of the things that we do. So bonds that have extra accrued returns attached to them, if you're selling them on the secondary, we will commit to buy them back with treasury funds. Or as I said earlier, you can approach us, and just for a small 5% fee, we'll do that as well.
Okay. Very good. And let's see, how far is double protocol NFT lending looking? And I am not familiar with that, so that must be you. You take it away. You're shaking your head like you know what he's talking about. So good.
Yeah, so double protocol is the renting platform.
Okay, gotcha.
Right now, we were going to leave it until main launch, and things were going to become rentable then, because the only reason you would want to rent an NFT is because of the boostability. So because the boostability, it benefits the main bonds, we weren't going to fully list until going live. But it seems that people have already found a benefit for renting them. So we are currently, as we speak, my dev is listing the contracts on there. And yeah, we're getting verified and we'll be on there very soon.
Okay, very good. And I want to point people to your Medium articles because there's a lot of good info in there. If you're looking for like, hey, here's exactly, I found this article from a while back, but it kind of shows the plan of, hey, here's where all the money's going to go, and it's in a chart form, so you can kind of look it over. So I'll leave a link to that, but a lot of helpful Medium articles. So if you're wanting to really dive in and get into the nitty gritty, the white paper is pretty good, and then the Medium articles I've found very helpful as well. So just wanted to point people there. Robster says, what's the go live date?
So the live date for the main protocol is June 30th.
June 30th. Okay, yeah. Very good. Quartermile says, is the company registered anywhere? SEC registered. We kind of talked about this earlier, but no. And actually, you do not want companies to be registered with the SEC because then you would not be able to invest in them any longer. The SEC would more than likely say, okay, this is only accredited investors that can get into this, and you'd need $1 million net worth. So we do not want crypto companies registering with the SEC, in my opinion. But let me open it up to you to answer.
Yeah, so just to further say on what you've just said, no, we are not SEC registered. We are a registered company. We're a registered LLC in Wyoming, in the USA. We have legal teams constantly watching, updating us if we need it. We do not need to be SEC registered. If anything was to change, everyone would be updated. But we are told from a legal point of view that it will not be needed.
Okay, very good. And it's always, I always say too that, you know, a lot of the crypto space, the NFT space, and this project are all works in progress. So, I mean, as you know, if the SEC comes out and says, hey, this is what needs to be done, then I'm sure for US investors, you guys will, okay, we need to word it this way. We need to have this disclaimer here. You guys will work with that as it comes.
100%. All DeFi companies need to be ready to pivot. It's just the nature of the beast at the moment. We're so early. We don't know what regulations are going to come tomorrow. So we've covered our backs. We have legal people watching for us. We'll be updated if anything changes. So yeah, we're ready to pivot if needed.
Okay. Very good. Well, if there's no other questions, I feel like that is very helpful for me. Again, calls to action. What I would say is first the free one. I always start with the free call to action. Well, the very least you could do is like this video. Okay, that gets the word out to more people. That's helpful. Second thing, this is free, is just hop in the Discord. Get more details. If there's anything in your gut that says, I'm hesitant about this, or I don't know about red light chain, hop in the Discord. It's completely free. Get to know the community, ask your questions. Again, this community, from my experience, has been very welcoming. They don't take things as FUD. They take them as, okay, it's good to be skeptical in these markets conditions.
We ask for it. We 100% we do.
Yep. You would much rather have people ask the hard questions and get them answered than not ask them and then just stay away and not invest. Like, it's better to just, hey, let's dig into it and get these questions answered. Let's see. Why are they going with quarterly payments over more regular intervals? Do you want to just talk about your payout structure again and why you decided to do it that way?
Yeah, so the quarterly is for the pre-sale NFTs. So because it's based on protocol performance and protocol profits, it doesn't make sense to let's say do that monthly also, because we could have them profits working for longer in the protocol and being compounded, and being quarterly, then you'd have a higher payout than if we were to pay monthly, because the protocol paying monthly would mean that there's money leaving the treasury to pay people out when that could have been working for another 2 months. So yeah, that's the reason for the NFT quarterly payouts.
Okay. Nope, that makes sense. So again, calls to action. Join the Discord. Kicking it with Killer says their Discord is very friendly, so that's good. That's what you want to see. And then if you decide, hey, I want to put some money into this, I'm tired of the rug pulls. I'm tired of putting my money into 2% a day and then I lose it all. It's not working for my financial goals. Then this, 15% minimum. The goal will be to get higher than that as the treasury grows. But you can get into the pre-sale. It's USDTR on the red light chain, which again, it's very easy to get bridged over. It might sound daunting at first, not very difficult, but then it's going to be $550 for these phase 2 NFTs. And I assume you can mint as many as you would like. So if you're wanting to put in,
you can mint as many as you want, up to 10 from Max Wallet.
Okay.
If you mint 5 or more in one transaction, the price drops to $450 instead of $550.
Oh, wow. Okay. So there's a discount if you do 5 or more, you're saying. So
Correct.
if you want to put in more than the 550, you can. You just have to mint multiple NFTs. And there's that's actually a pretty big discount if you do more than 5. So just keep that in mind. Make your spreadsheet. I love spreadsheets. So make your spreadsheet of, hey, here's what my returns will look like. Do your planning there. So, well, that's all the questions I have. That looks like that's all the questions the audience has. Anthony, do you have any final inspirational words for the space or for the audience?
Thank you very much for having me on. As I said before, we're very welcoming in Discord. You don't even have to just come there to invest. If you want a safe space to be able to discuss other things, we're not the kind of Discord that stops people discussing other projects. We'd rather people be able to come into our space and have that safety net to be able to discuss with other users, other investors, what they think of things, and just generally create that safe environment. So even if you don't want to invest, come to the Discord, come talk to us, get to know us, and we'll take it from there.
Okay, yeah, and we didn't talk too much about it, but I believe you guys originally came together because you were part of all these rug pulls in the DeFi space of the 1% a day, 2% a day, rug pull, rug pull, rug pull. Hey, let's make a safer. I'm not going to say safe. We'll say safer place for investors. So that's kind of why. That's where this came out of. So like to see it.
That was the whole sentiment around it. We just wanted to create a safer area for people to discuss things, people to invest, which is why I touched upon building a network. That's the wider goal. Build a network of protocols that we know personally. Build a network where every protocol knows each other, not just knows the protocol, but knows the team, knows the owner, knows the name, knows the addresses. And just generally grow that safer space for people.
Okay, very good. Well, I want to thank first the audience. Audience, you are the most important part of the James Pelton channel. So appreciate you guys very much showing up on a Saturday here for an AMA. Appreciate it very much. Please hit like on your way out. And then Anthony, thank you. First and foremost, I like to thank you for building something in the space. I love this space, and the space is full of garbage. So I appreciate you building something in the space that I think will actually help people financially. And then thanks for coming on my channel to share it with my community. Really appreciate it.
Thank you, 100%. And sentiment is sent back straight back to you. We need more people doing good things.
Thank you.
It'll start small, but we'll make it happen.
That's right. Slowly but surely, one brick at a time. And oh, by the way, just so the audience knows, I'm working with deHedge for possibly more collaboration and more partnership. So we're just trying to figure out what that looks like. But I like the safer plays. I'm tired of people losing money. So appreciate it.
100%.
Awesome. Well, hey, appreciate all you guys very much. And I hope everyone has a great rest of their Saturday. Thank you so much.
Thank you very much.